Team, for the next 90 minutes, we're going to be talking about day trading weekly options. And I have Thinkorswim open on my other screen, ready to rock and roll. So I'll be doing a lot of examples. First and foremost, I can say this for sure. In my personal opinion, who is not going to trade weekly options? I can tell you who you shouldn't. If you know you have a gambling problem, you shouldn't do these. So bye if you're watching this. Now, again, if you can overcome it, if you realize that it's a problem, if you know that you have certain rules in place, because weekly options are the fastest things in the world. Talk about numerous percent returns in seconds or losses, right? Gains or losses in minutes. These instruments move so quickly. And granted, you can make a lot of money doing them. You can lose a lot of money doing them. It's all about speed. But my personal opinion with day trading weekly options is this. You need to make sure that you at least know how to day trade. You at least know how to follow your rules. You need to know what to look for. One of the absolute best things that you can do for weekly options is create a list of stocks that you follow frequently, which we do here at RLT. That list is oftentimes Tesla, Amazon, Nvidia, AMD. Those four are great for option trading, specifically anything that involves tech that has a pretty high ATR, which stands for average true range. So if it has a good average true range, great volume, so something obviously really, really powerful and really high, and it moves quickly, those are going to be what you're going to be focusing on. SPY and Qs, absolutely. I mean, they're one of the most liquid instruments on planet Earth. They are a combination of everything. So my suggestion is focus on one of them. I don't think there's specifically a reason to trade both SPY and Q. Trade either SPY or the Qs if you want to. But here's my true opinion on SPY and Qs. Again, it's just my thoughts. I do day trade them. It's a little bit on the rarer side because they're designed not to move tons. Essentially, when I say design, right, they're a combination of everything. So very frequently you can have nice moves, and the options, you easily can have those 20 to 40% return on an option very, very easily. That can certainly happen because the options are priced quite inexpensively. So if you're dealing with a 20 to 40% range on your options, that is certainly something that you can capture with the Qs. But really anything in the triple digits, the 100% returns and more, it's a little bit harder because, again, they don't have huge daily ranges and volatility. Now, once you have your list comprised of what you focus on, you can absolutely add special stocks that might be gapping one direction really hard, bullish or bearish in the morning. But every single night, you want to sit down for 5 minutes and look at the chart and say, if then this, I will do this. If this happens, I do this. If this happens, I do this. Let's go look at Tesla today, for example. I will have a mentorship coming up here soon where all we're going to do is trade Tesla every single day. And one of the things that I do is I outline specifically where the high and the low is and where any type of moving averages are. And I go look through all the moving averages, the 10, 20, and 50 EMA. You all know this, 10, 20, 50 EMA on the daily, weekly, and monthly. So I just go find out where they are, and the 100, 200 on the daily, weekly, and monthly. That's kind of the process. Now, generally, I don't have to do this every day because I will realize that the 100, 200 on the weekly and monthly aren't going to move that much. Same thing with the daily. So this is going to be a much slower. Same over here. The monthly and the weekly is going to be pretty slow. You don't have to really do this for 2 or 3 minutes a night. It's not something that's extremely laborious. Once I draw the lines, then I can create my plan. You don't have to physically write your plan down on pen and paper. If you're a weirdo, you can, but I generally just write it here on the chart. So I will say something of this nature. If Tesla opens below, or if Tesla does, right? If Tesla opens above. So I kind of create and plan what prices I'm looking and where I'm looking for it to happen at. I'll just kind of write it down. One of the things I absolutely look for without question is an open above or below previous highs or lows. So the very, very first thing I'm gonna look for, an open above the previous highs and lows. Because if you get an open past a previous low or an open above a previous high, you're going to create good momentum. People will be really, really excited and things are going to be moving. Then I kind of go in, draw some support and resistance on the pre-market and play it from there. If I have a long-term average, for example, Here, one of my lines is the 200 simple. I will create a line here at the 200 simple. And if I go into a smaller time frame, I will know where that moving average is. So perfect example, here is Tesla, and this is a 3-minute chart. What I'm going to do is just show you how one of the options on Tesla moved today for those of you who might not be super familiar with day trading options, but I'll show you how one of the options did move on this particular trade, but more importantly, why you could have played it and how you could have played it and how you would have known to potentially consider this. Now, I did not take this trade personally today because what I just mentioned is I focus on stocks opening above or below the high of the day. That's kind of like my main protocol. I could have taken this trade. I probably should have taken this trade, but I did not. I'm always clear on what I take and I'm always clear on what I don't take. I never want to lead anyone astray. I never want to be that person. Never will be and never have been. So first and foremost, one of the things I love doing is wave counts. This is an art. This is not science. This is you building your house. What does your house look like? Once you build that house, you live within your walls. You are the creator. You draw the counts. There are obviously ways where you can look at what worked and what didn't, but you can kind of create your counts and you can go, this is what I think based on this information. If you can create what you think based on that information for you, you can simply create a trade based on that information that you created yourself. So what do I mean by all that? Well, at some point in here, let's just pick somewhere in this purple circle. You would have known that the 200 simple on the daily is right around 906. You would have known that in advance before the market even opened. And after you see all of these bear candles in a row, you would have been able to recognize that Tesla made a new low. For all those who are watching live, type in a 5. And if you're watching this on the recording on YouTube, put in a 5 in the comment section below. If you can visually see and identify that, yes, Tesla made a new low. Not only did it make a new low, but you had some type of weird little move right here. Okay, we had a move there and we had a new low there. This is some type of wave structure. One of the things that I look for when I'm creating my waves is I try to find a wave 3. That's my goal. Wave 3s often have tons of bearish candles and tons of bearish volume. Can you see in this particular chart a potential wave 3? And again, if you're like, what are wave counts? I have 2 videos that are entirely free on YouTube and all over the internet, helping you understand wave counts. If you have a question about that, also post it in the comment section below, and I'd be happy to send you a link for that video. All right. So everyone's saying yes, they kind of see it. Hector says it's the big one. So what I'm going to do is I'm going to draw it in red. So this would have been the wave 3. That's the wave 3. This in purple would have been the wave 2. And this right here in blue is the wave 1. We have a 1, 2, 3, 4, 5. Would you have known that Tesla is going to bounce after a potential wave 5, after 7 bear candles in a row, after it makes a new low and it's hitting the 200 simple moving average on the daily chart? The answer is potentially. There is a chance. You don't know for sure anything in the market, and you really don't know for sure much in life. We don't know. There's some things we know for sure. There's some things we don't know for sure. But we can come up with a plan that says, all right, well, we made a new low. Most of us, when we trade, unfortunately, we wait for new highs before we get in. Write this down. I should not wait for new highs before I get in bullish. You do not have to. If the trend is already bullish on a larger time frame, you do not have to wait for new highs. Now, is this a rule? I don't know. This is kind of my rule. This is what I do. Like if the trend's already bullish, I don't have to wait for new highs. Like buy a dip, buy a pullback, do some analysis, and then hope and pray. Woo! All right. So let's go. What's a larger time frame? Right now we're on a 3-minute chart. Well, a larger time frame, I'm going to delete everything that I have right here. A larger time frame could be an hourly time frame. So if we go look at an hourly chart, are we trending up? Yeah. I mean, at this exact moment, we're up / sideways a little bit, but in general, definitely higher. We go to a daily chart. All right, let's go to a daily chart. Are we bullish? I would say so. And if you're like, I have no idea, well, you can always turn on a indicator that we provide for free. It's called the trend following momentum. And you can look at it and say, is it green? If it's green, the trend is bullish. So larger time frame, Tesla's bullish. It came into the 200 simple moving average. That's the spot to buy. 3-minute chart. You did your wave counts. You had the 200 simple moving average. You could have purchased an option at that particular price, and you would have likely bought the 906 or the 907 call option. So first and foremost, question I get the most, how do I choose the right option to purchase? Here's the best news. That is not the question you should be asking. That's the most irrelevant question in the whole formula. Now, it is relevant, but it's not the most relevant. That's like getting in a car and saying, which tire has the most amount of pressure? Which tire is on my car is inflated the most? That's the similar question as far as like, is the vehicle safe to drive? Because if you're focusing on a tire that's inflated the most and there's 3 other ones that are not inflated at all, it's going to be hard to drive. Make sense? Here's how I choose it: in the money or at the money, weekly expiration. So that the closest expiration is what I get, because here's the truth about trading weekly options. If it moves in your direction that you wanted, good. If it doesn't, it's not going to matter. You're going to lose money. It's going to go against you. If it moves in your direction that you want to, great. If it doesn't, well, it doesn't really matter then. Okay, cool. So let's go look at really quickly an example. And again, I did not take this trade. I say that because just in case someone splices this video on YouTube and posts it somewhere and says, look at Jerremy, whatever. I always like saying what I did and did not do. Always want to be transparent. So let me share with you a Thinkorswim platform. And what I'm also going to do on this platform is show you how you could have identified the trade to take and how you would have set it up. All right. So this is Tesla. This is an option chain. So with the option chain pulled up, I mentioned that I want to select the weekly expiration because I'm day trading. I'm going to be in and out in one day. That is very crucial to understand. I always exit my option trades the same days. I can always do that. So this right here would be the weekly most expiring closest, right? That's this week. So we would click on that. Now, this is what it would look like at the time. Jay Nels says, how can I identify the 10 EMA, 50 EMA, and 200 EMA? So Jay, you're going to have a charting software. You'll need to have the ability and capability to do that. That is very, very factual. All right. So we're going to kind of go back in time just to look at what it would have appeared. Come over here. So Tesla made a new low at this point in time. We were trading around, let's just call it 907, 906, or 908. Could you have purchased any of these strike prices? Because again, this is where Tesla's trading at. We can see this visually. We can look at it with our eyes. 906, 907, or 908. Could we have purchased any of these strike prices? And the answer is yes, sure. So if you pop into the to the option chain, what you'll notice on this expiration is you only have 900, 905, or 910. It's a conundrum. What should we do? 908, 907, 906 don't exist. What should we do? Choose, right? Just pick. What I love to do is I do have volume and open interest up on my option chain, and I will select the one that has the largest of both. It's good to have. Will you be able to get filled on essentially any contract that you have on Tesla at any time? The answer is yeah. You can probably buy and sell any expiration, any contract at any time, and you'll get filled because it's one of the most liquid instruments on earth. But for sake of the video and for sake of education, I would have purchased this one, which is the 910 expiration. That one, as you all can see, has the largest volume and open interest relatively. Could you have bought the 915? Sure. Both of them work. Don't count your golden chickens before they run through the cornfield. All right. So here's what we're going to do. We're going to select the 910. There's numerous ways to do this application I'm about to show you, but the easiest way is to right click on this option and come down here to copy. Boop. Click on copy. Come over here to charts. And in Thinkorswim, you most likely will have one chart already loaded. A way to select 2 charts is to click on this little button in the top right-hand side. This is probably what it will look like initially. So when you're here, what you're going to want to do is select these double chart windows like this. You can put Tesla on the left and you can put the call option on the right. Now, just like everything else, you want to select this time frame. So the green arrows right now are pointing to the daily time frame. All right, the daily time frame. So we're going to want to change this so that we can see similar price action. So what time frame were we on earlier? We were on the 3-minute. So we're going to go and change this to the 3-minute. Now, granted, you probably will have to add this time frame, full disclosure. Okay, you're going to have to add this time frame to your Thinkorswim. I don't think it comes natively, just FYI. So if it's not there for you, you might have to add it, which is very easy to do. Okay, so since we're here, what we're looking at on the right-hand side chart is the option pricing chart. You can see the option and how it's moving based on the price of the option in candlestick form. What's on the right is the stock chart. Now check out how beautiful this move is on the stock chart, because here on Tesla, what you're going to notice is the stock traded right down to what interesting price. What particular level did Tesla trade down into? It traded down into a support based on a pre-market low. Pre-market low. You could have known the pre-market low very early in the morning. You could have had that line drawn. This is something that you would have known ahead of time in advance. So the green line shows you a pre-market support, pre-market low. So this red line over here, that could have been drawn before the market opened as well as a pre-market high or a pre-market resistance. Case in point there and there. Okay, good to know. So we have those two lines. Crazy. Good old support and resistance. What is one of the key ways to trade stocks? One of the phrases of phrases, the thing that you've heard all the time in your life, the one of ones, plan of plans, buy low, sell high. All right. When I look at most traders' trades who are hemorrhaging money and they're getting their timing wrong, they are shorting here and they're buying here. I'm able to draw a line for them and I am able to go, what looks incorrect for you? What seems off here? And it takes them a while to get it. And they're like, I keep shorting right there. Yeah. So draw some support, draw some resistance, and have your lines there. See if people bought there in the past. And if they have, try to look to go long if you can find a signal or two. And if you can't, no big deal. Don't. That's actually one of the things I love about weekly options is once you can master just basic chart reading, basic support and resistance, drawing some lines, sitting down for 4 minutes at night, planning ahead of time. When you get a trade that sets up, the ability to go in, take a trade, put on some risk, let it start work relatively quickly and then exit and make $2,000 or $3,000 for the week and you're done, right? One trade in that week and you make $2,000 or $3,000. If I'm being realistic, it's one of the easiest things in the world to do without exaggerating. Waiting for the setup, seeing it, drawing out my lines, planning it ahead of time. And when it happens, get in, make some money, get out, boom, be done. Take that money and go do whatever you want to go do. Slowly process that, my dear friends, because you do not have to trade every minute of every day to make money. It can be easy. I'm not going to go into the huge, amazing psychology of that, but it's very, very important to know. All right. So now let's identify, and we're going to zoom in right in here into that trade that we were talking about on Tesla. And let's just ask ourselves, how could we have known in advance the price of the option? Well, again, we would have had a little bit of a support line. And let's say, as an example, that we set up the option. I'm gonna give you some really cool tips in just a moment. Let's say you said, when it comes down to here, I'm going to buy. When it comes down to here, I'm going to buy. And you're going to have to set your stop arbitrarily. Because when you're buying calls at support or you're buying puts at a resistance, we don't know if it's going to break through or kind of wiggle around. So you're going to have to kind of set it arbitrarily. It's going to take a little bit of practice. But what you can do is you can look at the option chart and you can know for sure with a certainty that you're buying these options at 11. So go ahead and write in a number. Where do you think you would have put your stop on this trade? I'll tell you exactly where I would have put mine. Again, did not do this trade, but I can promise you I know how to trade Tesla options very well. Very, very well. And this is the exact process that I used to do it with. All right. So some of you are saying that you had picked 9. Most of you are actually saying that. Great. All right. So buy at 11, stop loss at 9. My stop loss would have been 8. I'm not saying you guys are wrong. I'm saying that's where mine would have been. That's all. So to buy at 11, stop at 8. That's where my stop would have been. Because again, my goal when I get into a trade is I do not want to lose a full risk unit. That's all I care about. If I cannot lose a full enough risk unit long enough, I will crush a trade eventually. So 11 minus 9 is how much? It's second grade math. So 11 minus 9 is 2 and 11 minus 8 is 3 for me. So what you have to do is that is your risk. That is how much you're going to create your risk by. So if you have a $500 risk unit and you are having a stop of $2, how many shares is that? 500 divided by 2 is 250. So if it's 250 shares, how many contracts would this be? 2 or 3. That's options. Unfortunately, you can't buy half size. That's why I love shares. I love trading shares because it does give you a lot more flexibility and tons of wiggle room. But when you're trading options, it comes in 100 share lots. So it's either 2 or 3. If you buy 2, you're not going to risk as much. If you buy 3, you're going to risk a little more than $500. So if you ever see someone post in any community, any online forum, whatever, real life trading or not, and they're like, I just made 17 R's. And you go, how? And they go, options. You know, they probably bought too much. That's how you know. Yeah. They just bought too many and they got lucky. Good for them. That's okay. These things move very quick. All right. We are making a great journey. So 11 by 8 or 11 by 9. creating some room, creating some wiggle room, buying it low, out of support, putting in a stop slightly arbitrarily. And then, of course, the big question is, when do you sell? That's always the answer. Always the question. I mean, well, A, when you make enough to buy something you need or want, that's a great answer. Would it surprise you to know that the majority of the trades that I actually take, I already know what I'm going to pay for if I win on the trade? Yep. True story. If I get into a trade, I'm like, all right, if I win on this trade, I will win $7,500. And if I make $7,500, I'm going to buy this and this, or I'm going to pay for this and this, or that's essentially going to go into a renovation of part of my house, because my house is under renovation. Because when I buy property, I buy the absolute worst trash holes possible, and I live in them and I fix them up. So yeah, you put the vibe out so that you just kind of know, like, hey, this is what I'm about. If this wins, this is what I'm gonna do with it. It also forces you to dream and plan kind of constantly, which is good. All right, B, this is what the majority of gurus, as they're called, or people that you will watch on YouTube or Twitter or wherever that make, percent on one trade. So when you see like one of those thumbnails, like, I just made 47% in 6 minutes, what they do is they buy an option at 11. And if that option goes up to 15, that's a $4 gain on an $11 risk. That's around 40-ish%. Let's just call it 45. Let's call it 40. Does that make sense, team? I have no problem with that. I have no issues with that at all. I want them to make as much money as they can, selling whatever they can to other people, but I hope they do it with integrity, and I hope they do it with honesty, and most of them don't. But this is what you will see all the time, is they'll buy an option and no one will, they won't tell you. They don't care. They're just, that's what their brain is thinking, is here's how much percent gain I just made. They're not worried about the risk. They're not worried about any of that. They just know that if they buy something at 11 and it goes up to 15, you make a $4 profit, you're going to make about a 40% return. So I'm going to wonder if that makes sense. I at least want you to be aware that it's look how quickly Tesla did that. It went from 11 to 14. Type in a 2 if you can see that very evidently. I mean, it did. It went up to 11 to 14, 11 to 15, very, very, very fast. So you could have made a 40% return. And here's the best part: on any amount of money that you wanted to, in less than an hour. Welcome to what caused Jeremy to lose his first million. This is how I lost all my money the first time. This is how I went broke at 20. Yep, this is it. Because once I was like, wait a minute. I can just buy these things directionally? Here, hold my beer. Because you all know my story. I took $400,000 and turned it into 1.2 million in a few months. And then truly, I took 1.2 million and was putting it all on just one option. All of it. No fear. Yeah. Oh, by the way, don't do that in case you're wondering. If it popped into your brain like, that sounds like a good idea. That's not a good idea. Don't do that. Not for a while. Right. Build up to it. But that 1.2 million was having 10 to 30 to 40% swings in hours. So there was absolutely time. The one part of the story I don't really tell is this number went up quite significantly one day, and I kind of didn't sell it. I was like, oh man, wow, $3 million. That's kind of cool. It could hit 5, like the things you do when you're 21. So this was swinging huge. But the point is, and the truth is still there. The truth is, if you buy here and sell there, you can do that with any amount of money. And that is the return of money that you will make. And that's the part that slept into my little brain that sat in there and said, hey, bro, you want to make all the money so you can help so many people, and your dad will finally be proud of you, and your mom will finally be proud of you, and you can make enough money to do all these things. You'll get validation, all the good stuff started popping in my head. That's what I was thinking. But what I'm getting at is, don't do that. Do not put all of your money into an option trade, please. But also note that the magnitude of money is massive in the markets. It is huge. Fun fact, here is a way to take this trade based on the stock price. Now, I know you all probably know this, but just in case, I'll share with you anyway. So right now we have I'm going to go to present chart so we can just look at it. I'll set a trade up right now just so we can kind of see what's happening. So at this exact second in time, the 200 SMA on Tesla is still right here at 906. It's still there. And what you'll notice most likely is Tesla's stock price is at 907. And I'll point this out for just a moment for clarity purposes, but you notice this, and this. Look at it on the option chart. Boom, boom, and boom. Why is the option going down faster than the stock is going up? Welcome to options. Now, I know all of you probably know this, but if you're watching this and you don't, that's the part that sucks about options. 75% of them expire worthless. This is something called Theta, which is why you don't want to sit into an options trade forever, because a stock can have its movement, entry here, stop there, and you sell it there and just absolutely crush it. But what you will notice and should notice is that Tesla never quite got up to that price. Look at it. It never quite got there. So the stock did. Notice how the option didn't. That's crazy. So you have the Greeks, the implied volatility, all the fun things, all the fun aspects. Baez asks, is the best time to trade weekly options the first hour of market open? No, not really. There's no specific time that's better or worse, realistically. It's all about risk, man. If you catch the trade the right way and you know your risk, you can really crush it. All right. So the strategy that I want to show you is not really, sorry, it's not a strategy. It's just it's a way that you can trade in Thinkorswim and plenty of other brokers, is I'm going to set up to buy this call option when Tesla makes it back down to 906. Right now it's 908. Would that be helpful for anyone here? Now, the hard part is I'm going to have to kind of guesstimate where the price is going to be. I'm going to have to guesstimate, but that's okay. I'm going to guesstimate probably about 8-ish, but I'll show you how I do it. I'm going to right click on here. I'm going to go to buy custom OCO bracket. So what I'm doing is I'm right clicking on the chart. Corey says, I've been looking for this. Well, Corey, strap in, my man. I'm about to blow your mind. So I got an OCO, and what I'm going to do is I'm going to select $8 limit, and I'm going to put my stop loss at 5. Okay, so I'm buying some at 8. I'm setting my stop loss at 5, and I'm going to look to sell at 11.55. How am I coming up with these numbers? I'm really just looking at the option pricing chart and kind of guessing, right? $8 is as low as it's been. And so, because right here on the stock chart, you can see in order to get to 906, it has to go a little bit lower. So my guess is the option price would drop if Tesla keeps going lower. This is just common sense, team. This is like pulling up a GPS and the arrow says take a right and you take a right. And this is common sense. Philip says, watch the amount of options in the presets right here. This is true. This is very, very true. So make sure you keep that in mind and make sure you know what your risk is, because if I buy at 8, I have a stop at 5 and I'm buying 10 contracts, what is my monetary risk on this trade? All right. So this will be a $3,000 risk. This exact setup that we have right in front of us. How do I get those numbers? Again, 10 contracts. So 10 contracts is 1,000 shares. That's easy. Times, well, the difference between 8 and 5. That's it. That's how you come up with it. How many shares are you controlling minus your multiplied times the difference between your entry and stop? Again, second grade math. It takes repetition. So I will place this trade, but yeah, this will be a $3,000 risk. But for learning purposes, why not learn with $3,000 on the line? It's a little bit less than my normal risk unit, but I'll swing for the fences. It'll be fun. So then the next thing I'm going to make sure is that it's a day order, because again, this is a day trade. So I want to get in and out today. Then I'm going to come to this cog wheel. Now this cog wheel is game changing if you practice it, because this cogwheel allows you to go in and create multiple different things to base your trade on. It can be volume, it can be moving averages, it can be all kinds of stuff. Philip says every dollar is $100 per contract with any option. You're absolutely correct, my man. $100 every dollar per contract. Yep. All right. So if I click on this, this is what comes up. And we're going to go into conditions and we're going to submit this trade in the future. So 10 minutes in the future, this trade will be submitted. And I can change this. It just has to be in the future. So I could make this 44, which is 3 minutes from right now. And what I'm going to do is Tesla is the market price. So I can choose this. So again, see the symbol? I can choose the symbol. Method, I can choose is it the bid, is it the ask, is it the market? I can do, is it the volume? Is it, I don't know what front volume and back volume is, honestly. Or you can go down here and do a study. So you can add a moving average, you can add Bollinger Bands, you can create your own study that says if the SAMI moving average is doing this, then get in. So you can create your own studies in Thinkorswim and you can build an entry template based on that. But what I'm doing right here is I'm going to say Tesla mark is less than 906. That's it. That's all you have to do. Now you can add multiple ones as well. You can have more than one if you want, but you don't have to. All right. So Tesla, the market price is less than 906. You guys follow me on that? So if the Tesla price of the stock is less than 906, this is the price where I'm going to buy the option. Do you guys follow me? This is how I'm going to buy the option limit. And this is the amount of options I'm going to buy. Kyle says, do you have to change or to and? Oh, Kyle, thanks for taking the stick and poking it into my eye, bro. All right. Notice this 2-letter word right here in English, or. I have been asking TD Ameritrade for a decade. I've been asking Thinkorswim for literally 10 years, literally, to change that to an and, or giving me the option to do it. Because if anyone here knows programming, those are two totally different things. because what I want to do is build numerous conditions that all have to be accurate for the trade to trigger. Because if you have an or, if you have 4 ors, it doesn't matter. That's like asking your wife, hey babe, where would you like to go? Olive Garden or Texas Roadhouse, or you're screwed. If you have a bunch of ors, you're never going to go eat. Right? No one's eating. But if you go, hey babe, how would you like to go to Cheesecake Factory? And you can order this, and we'll go to a movie afterwards, and I'll give you a shoulder massage. It's a game over. It's a wrap. You're adding all these great conditions. Your wife's like, yes, I would love cheesecake. Does this all make sense? A decade. I've been asking them, team, please, can you make this happen? So if anyone in here is better than me and can reach out, I mean, I was even chatting with the man himself. He was gone. Tom Salznoff. He was gone at the time. I was like, dude, I don't work on that, but I'll build another platform that does it, and it didn't quite happen yet. But all right. So we're going to submit this order. Now, if you ever want to have this order go through and then cancel the order, you can do that as well without having to worry about it. Example. Have you all noticed in the weekly options newsletter, I say, if it doesn't do this by this day, cancel it. This is where I do that, by the way. I will just select the date to cancel. And if it hasn't filled, it'll just cancel. Is that cool? Saves brain space, so you don't have to worry about all of it. All right, so we're going to save. Now I can go down here to my sell order, and I can select market, and I can select market on both of these if I want to, or they can be limit, either one. But I'll show you, if you know where you want to sell based on the stock price, you could come in here and say, all right, this is a market order. I don't know what price the option is going to be exactly, but what I want to do is I want to sell market. I want to submit this trade, and Tesla has to be above, and let's just say for learning purposes, 9.15. So now what you can do is go, all right, sell the option at market, because I don't know what price the option is going to be, but I do know that if the stock price hits 9.15, I want to sell. Doug, yep, that is correct. But this allows you to do it ahead of time as well. Just another way to do it, because you can sell a limit, but this is doing it ahead of time based on the stock price, saying, I don't know exactly what price the option is going to be. You can select the limit. So for example, you can say limit, and I want to sell it at $12. But what if the stock price hits 9.15, but the option isn't worth 12? Will you sell? What do you guys think? Will you sell? The answer is no, because the option price isn't above 12. Yeah, that's what's crazy. So there are ways to situate that, right? You can calculate it and you can do all the things, but I do like doing limit, and I normally put in a number where I think it's going to hit. So I can look at the option price and kind of guesstimate. So in this example, if the stock hit 9.15, I'd be pretty confident that it would be above 11. But you can select market or limit. It's really up to you. That's your call. And then same thing down here with the stop loss on the option. You can come in here and you can select the stop loss. If you want something different, you can say, if the stock is below, if it's below $5, one way to stop getting wicked out based on option price is by selecting that it has to be below a certain price on the stock. The downside to this is you can get eaten up by Theta if it is an out of the money option and the stock price isn't below the price that you want. So a perfect example, let's say right now that you were bullish on Tesla and your stop loss is down here on the stock price. So the stock never gets down here, but you have a 9.10 option. Could this option literally expire worthless and you lose your entire investment because the option never sells? Yes, that could happen. So I will repeat that. The challenge of having a only exit me if the stock is lower than this price is that the option can be below the strike price, never hit your stock price, and expire worthless. That's all. So this is something to know when you're day trading. It's a little bit less of a factor if you're swing trading. It's a little bit of a less factor if you're swing trading because you have more time and Theta doesn't affect you as much. But Theta is a monster here. It really is. So what I'm going to do is submit this bad boy. Okay, here we go. All righty. And if I click play, so you can see that the order is now submitted on the screen. And you're still able to drag and drop these as anything else as normal. Brian says, it says the order cannot be submitted in the past. Yes, you got to go back to your cogwheel and increase the time. You got to go back to the cogwheel and increase that time functionality. So I'll show you guys what he's talking about. So I will, I'll cancel this order really quick and I'll go do it again. So buy custom, OCO bracket, and I'll click on this. And this is what he was talking about. So right here, you see how this says 1351, right? If you are selecting this in the past, this number has to be in the future, otherwise it won't fill. So whatever time it is on your clock, you got to put that a little bit ahead of time. I'm gonna pause here. Any questions on that? Fayez says, do you know if these conditions exist in interactive brokers? Yep, absolutely. I've actually made a video on that as well. I'd be happy to send it to you, but it is on our YouTube channel. And yes, it definitely exists. In fact, Interactive Brokers is better than Thinkorswim because Interactive Brokers has an and statement, and you can build some really silly, some super saucy and extra cool setups on Interactive Brokers. So this is under the conditions tab in Interactive Brokers. Makes sense? All right. Hopefully it makes sense and it makes dollars. I'm gonna do 13.51.55. We'll throw that in there. Hitesh says, Jeremy, to use Active Trader. So Active Trader is right here. So this is Active Trader. I don't use it because it's so fast and I do not like to feed my impulsivity. That's why. I'm not saying you shouldn't use it because notice if you hover over it, it says sell 10 limit, buy with 10 of a stop, buy with 10 of a limit. So all you have to do, literally all you have to do is click on this and it will auto send. Now, granted, you can go into settings and say, hey, don't auto send this, check with me first. You can do that. But even then, it is quite speedy. So when I've used it in the past, I found myself scalping a lot and taking a lot of just really dumb trades. So I wanted to slow my process down. I'm just being honest and transparent about that. It is a great functionality. I know a lot of people who are very good at it, but boy, I was getting at it. I was like, I'm on my limitless pill. You guys remember that movie? God, with Bradley Cooper. This is how I was trading when I did Active Trader. I'm a genius. Bang, 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 bang. Just hemorrhaging money. Couldn't lose money fast enough. So I have learned that lesson. I stopped doing it. So I give myself 2 or 3 minutes to set up a trade. But hey, you got to learn it the hard way. Some people are amazing at that. Brian says, do you like the new setup after canceling? Yeah, totally. I mean, at this exact stage right now, I think we're having our bounce. So if I look at it right here, we could set up another trade to buy right here. So this would be the neckline of this little double bottom here. This little very similar double bottom to over there. Type in a 9 if you can see the double bottom that came in earlier this morning off the 200. I'll draw it for you, but you have boom, boom, boom. Oh boy, red does not show up super well. Let me do it in blue. Bang, 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 bang. So there's the double bottom. There's the close with a neckline. So you'd have set up a limit buy here with a stop loss down here. But Jeremy, that's not the 10 EMA strategy. I know. I have a lot of strategies. There's all kinds of things you can do. The 10 EMA strategy, you could have gotten triggered in on the 10 EMA strategy somewhere over here on Tesla. The stop somewhere down here. It would have worked. The put trade would have also worked. So a bull candle closing below the 10 on Tesla would have been right here. So just so that we can have it, let's go look at the put 910, select, copy, and I'll just kind of show you what the put would have looked like on this particular trade. So the put trade's obviously totally inverted, right? So this is today. And what we'll notice is where we are right now, this would have been the put trade. If you would have played this, so right here, entry here, stop somewhere over here, would have been entering here, stop somewhere down here. That would have been the trade on the puts. Make sense? So again, that's the bear 10 EMA play, bull candle closing below the 10 over here, and then that quick little drop. The purple line, that's just on here. I don't really use it. So this is called the theoretical option price. If I'm being really transparent, that's never helped me ever. You can remove it. Yeah. I just know that candle's below the 10 EMA. It's very easy to add it though. If you don't have it on here, you can go to studies, add study, and over here you can add whatever you want. So here's your moving averages. Exponential moving average, boom, there it is, and there's your bull candle closing below. But I already knew that. I don't need the I don't need the moving average to tell me, but there it is. Are you type in a 4 if you're able to see how the bull candle there closes below that moving average, right? That was the signal to go short if we broke below the low, which would have been your entry over here. Philip says, are you saying we can play these options by the candle? We can play a hammer candle if we want? I am saying that. Yep. Yes, indeed. Cool stuff, team. Very cool stuff. So again, the puts, they do take a little bit more practice because they are going to move inverted to the chart. So seeing the candle and the price moving differently can throw some people off, but once you get it, you'll be fine. Great. So if you can set up a limit, obviously you can set up a stop limit. So same example over here. If I want to go bullish on Tesla above this candle, I don't really want to be playing puts. Philip says, can you invert charts on Thinkorswim? I'm sure you can. I don't know how though. That could get real tricky. If you're playing puts and you invert it, and you think it's a call. I don't know. I don't mind. I mean, puts obviously go down if the market goes up and vice versa. It doesn't bother me. I mean, I guess once you know that you're playing it bearish, you should expect this to go up and expect this to go down. But Cindy says, does a hammer on price have the same meaning as a hammer on options as far as playing it? Yes, it does. But I do agree that the options are more jumpy. So you absolutely need to, I generally don't play the option by itself without knowing what the stock is doing. It's the same sentiment, but it's going to be based on the stock, because no matter what people tell you, and I've talked to many very, very successful option traders, option volume does not move a stock. I have a lot of people go, oh, this option, a bunch of people bought this option, so it's going to go higher. Cool. They took a really good gamble. And if the stock goes up, great. But if it goes down, they lose a bunch of money. And I've tracked all those call outs algorithmically, where people are going, oh, a bunch of calls were bought on this thing. And I'll track it. It's 50-50. Sometimes it goes up, sometimes it goes down. But when it goes up a bunch, they're like, see, I told you a bunch of calls were bought up there and this stock rallied. The ones where they buy a bunch of calls and the stock goes down, they just kind of sweep that under the rug. Kyle says, what happens at expiration if we were still in the trade? All right. Well, this is a good question. Don't let that happen. Number one. So I'll go to the whiteboard for this. Go into the whiteboard. If an option closes in the money at expiration, stuff will happen to your account. Fact. Here are the only 4 things you can do in an option: buy to open, sell to open, buy to close, sell to close. These are the only 4 things you can do in an option. Okay. Then you have 2 different types of options. You have calls and you have puts. Now, the majority of you already know this, but if you bought calls and they expire in the money, you will be buying those shares. Hooray! Welcome to stock ownership. So if you bought calls and they expired in the money, by the way, if anything is out of the money, all the options are worth 0. So if you sold them, great. If you bought them, you lost your entire investment. So if it's out of the money, you can let them close at expiration or not. It's up to you. I guess it's up to the direction of how you're playing it. If you bought puts and they expire in the money, you will be, what do you think the word is there? Who wants to guess? You will be selling those shares. You'll be selling them. So selling does not necessarily mean short, but it does mean selling. Example, let's say you have 100 shares of Walmart. That's a bad W. Sorry. If you have 100 shares of Walmart and you have 4 put options for whatever reason that expired in the money, what would happen to your account? Albert says, if you don't do anything, will your broker do this on your behalf? Oh yeah, that's what I'm saying. Your broker's doing this for you. Yeah. They're all going to assign this automatically. All right. So you have 100 shares long of Walmart, 4 puts. You will be short 300 shares of Walmart at close on Saturday morning or Monday morning when you wake up. Does that make sense? That math? Because you sold them. Now, if you had 400 shares of Walmart, all good. Doesn't worry. Don't worry about it. Sammy says, ask me how I know. This lesson sponsored by Pain. Would you like to lose money? Let options expire in the money and you will. But by the way, this is exactly how I learned this lesson too. Oh, this is good. All right. So I'm glad you got that point across. Now for the other piece, it's all kind of in reverse at this stage. So if you sell to open calls and they expire in the money, if you sold to open calls and expire in the money, you will be selling those shares. Same thing, but just in reverse, right? Same thing for puts, right? Puts, you will be buying shares if in the money at expiration. Hector says, can you buy to cover after hours? It's a tough one. The answer is rarely, kind of, sometimes. It has to be within like 4 to 5 minutes of market close. It's usually on a Friday, and you oftentimes have to do it through your broker. It can be done though, but it's more on the rare side. For shares, absolutely. Shares can be done, no problem. But with options, you do have to have a buyer or a seller. So you need to be very cautious on that. I wouldn't advise it, wouldn't try it, but it can be done, but you have to do it with a very, very quick window. So anyway, fun stuff for sure. There are a lot of things, but do not hold your weekly options to expiration, especially if you don't want to, because if they expire in the money, something will happen to your account. So I'm going to pause here for a moment, asking questions, and then I will go through a swing trade with the exact same analysis so we can kind of get an idea of how you would do this with another option. Kyle says, when is the closest to expiration that we should get out? 3:45 Friday Eastern, right around there. Kyle says, does it change if you were out of the money? Again, if you want it to expire out of the money, then you don't have to do anything. If it's very, very, very far away and you're like, I don't care, then you're all right. Tony says on your Walmart example, you would be short 300 shares. So on Monday, what does your broker do to your account? You'd be nothing. It would just have negative 300 shares in it. Yeah, that'd be it. So on Monday morning, you'd have more cash in your account and you'd have negative 300 shares, just like it would be a day trade or any other swing trade. If you can't afford it, one of two things will happen. What if you can't afford negative 300 shares? Yeah, you'll get an email, you'll get a phone call, or if you're trading with a substantially small account and when you filled out the brokerage statement, you said to the broker, hey, I don't have any money. Remember, do you guys remember typing a 2 when you're filling out your brokerage? They're like, how much money do you make? You guys remember that? What's in your bank account? What's your liquidity? They're asking that because they want to know what they're going to do to your account if something happens. I've told a few people this, and I only have one bad story of a margin call. The lady was not a student of mine, unfortunately. She just knew me on Twitter, reached out one day and said, hey, Jeremy, Charles Schwab just called and said they're going to take my house. Is that true? I was like, I have no idea. Tell me more. She sold naked calls on a biotech stock that went up 300%. And she was down 730 grand or something. I mean, it was ridiculous. She sold like 350 contracts. I was like, what are you doing? Yeah. She got hosed, guys. Like she got absolutely squished. And I was like, hey, I'm really sorry. I feel terrible. I went through the exact same thing. Kind of, not really that bad. But there is one department that you do not want to owe money to, and that is a broker. I'd rather owe money to a bank than a broker. I think the reason they're called brokers is because they will broker your knee in half if you don't pay their money back. Dog, like for real, you do not want to be on that side of that phone call and don't have that money. Because I got bored one day and read some of those agreements that no one else reads. It's not good. They will put a lien on your house. They will call the IRS. They are legal bookies. Yeah. Very true. So I'm saying this in all seriousness. Like you want to make sure that you're protected. Tony said, did she lose her house? I'm assuming so, man. She only called me and that was it. Like after we talked on the phone, I gave her some tips of like, hey, there's nothing you can do about this. So what other money you have, figure out what you can do, figure out how you can pay it off, what agreements you can work out, but you're royally hosed. I hope you have more money. That was essentially my advice. Because you guys all know I put my cell phone number everywhere, right? Doesn't bother me for people to call me. I love that. And it was just one of those things where I felt terrible, but what am I going to do? I don't know her. She wasn't a part of the team. I didn't no idea who she was. She got screwed. Yeah, poor thing. That sucks. But did she lose her house? I hope not, but probably. All right. I know that went a little dark for a second, but essentially be really, really cautious on trading. I mean, this is real. All right. You're trading the largest, most magnificent money market on earth. This is it. This is the market. This is the ocean. Imagine the ocean was full of money. That'd be the stock market. All you ever want is on the other side of the screen, and all you could ever lose is on the other side of that screen. It's both sides of the party. Okay. Go ahead and throw at me a stock that you want me to review for a swing trade. Whatever you guys want me to review, I'll go in and pop in and I'll show you how I would analyze it for an option trade. Same way we talked about earlier. All right, let's go do Boeing. I haven't looked at Boeing in a bit. So Mark requested Boeing. I had a few others that were requested, but I'll go look at Boeing. This is going to be right on top of the 10. This is not going to close below. Yep, there you go. Did not close below. So right on top of it. Let's just say, for example, we want to short Boeing below this candle. It's probably not a terrible trade. Let's say we want to short Boeing here, stop loss here, target down there. It looks like a good trade. I would give that like a 7.3 on a 1 to 10. 7.3. That's what I would give. And so again, would I take this trade with a lot of money? No. Would I risk an R on it? Sure. What other analysis would I do? Well, we can do some other analysis. Let's go look at the monthly chart. So the monthly chart, we're bouncing off the 200 simple. So you can see the 200 simple. I already have it drawn with a purple line. This is a morning star reversal. You got a nice gap on a monthly time frame. So in general, that looks a little bit bullish. The 10, 20, and 50 exponential moving averages are acting as a resistance. So that could pull down a little bit. Here's the weekly 10 and 20. So we're above them. We got the 50 that could press it down. We're above the 10 and the 20. So we're kind of in the middle of no man's land right there. Nothing crazily special or exciting. Same thing with the long-term averages. We're pretty far away. Those are essentially meaningless at this point. And the daily 100 and 200 we're in the middle of. We're pretty far away. And other moving averages were bullish. So it's essentially kind of a coin flip. It's more sideways than directional. If I played it bearish, that's fine, but I'm not extremely elegantly excited about it dropping. But sure, if the whole market goes down in the next 3 or 4 days or weeks, then this could work. So now what expiration would I buy for this trade? I would buy September, October at the latest. So regular September expiration or regular October, but that would be the last one. What would make me choose one versus the other? How fast or how likely I think the stock's going to drop. If I'm really, really confident it's just going to absolutely steamroll, I'll play September. If I'm like, well, it could take some time, I'm going to give it a little bit of time, I'd choose October. But there's really no specific wrong answer on that one. So now what I'm going to do is I'm going to pop back into this here and let's dive in to Boeing. So here's September expiration, and I would go with 165 put. All right, so 165 put has 175 volume, 7,000 open interest. That looks fine. So come over here, copy, come over here to the charts and paste it. I would put this on the daily. Now, what you'll notice, this is the 5-minute chart. You guys see this? See all these dashes? You do not want to day trade something that looks like that. Ever. It's really crappy spread. The fills are terrible. The volume's not great. Not tons of people are trading this particular spread on this particular day, on this particular option. Nah. You trade this, you might as well be eating a shoe covered in mustard. It's the exact same likelihood of enjoyment. Who's with me? All right, cool. What we're going to do is we're going to change it to a daily chart. It's going to look a little bit better. All right, here's the daily. So if this is the stock chart and this is the option chart, what we can clearly see is I can look at the high of this put, looking at this candle and this candle. So if I hover over the candlesticks, you will see on the top left up here, the high. The high of this candle is 650 and the high of this level is 650. Fair? Therefore, I can distinguish pretty easily that if we break above the high of these two candles, we should most likely be breaking below the low of these. Therefore, I'm going to zoom into here, figure out the exact price. Okay, perfect. And that would be 165.65. So I'm going to come over here and say, click on buy custom OCO bracket, and I'm going to choose 655 limit. That makes sense, right? Because the high is 650. So I'm going to give it a nickel on the top there. And the stock has to be below this particular price for it to trigger. So I'm going to do 655. Now, how do I place my stop loss? Well, it's pretty easy. We can choose one of two prices. I can choose this price, which is below the low of both candles, which would be approximately here. Type in a 2 if that makes sense. That should be pretty easy to see. I'm just putting it, above the high of that bear candle. That's choice number 1. Or choice number 2, I put it up here, which would be below there. Both are valid. If I'm selecting the pink line, what we will notice is the lowest the options ever traded to was 382. So if I want to put it lower than that, I could put this at 55. So if I buy at if I'm buying at 655, my stop is 355. What would my risk be? $3. And so now you essentially know how Newsome swing trades options. It's not crazy hard. So if my risk is $3, just like the day trade, I can come in here and go, all right, 355. I would have to buy 15 contracts for that to be at my risk limit. Now I have to change this to a good till cancel because this is a swing trade. Come in here, submit at, so we could submit it in the next 10 minutes is fine. Symbol less than, and the less than was 165.65. Oh gosh, I didn't type it in the box. 165.65, submit. Stop loss is 355 and target, we get to choose, right? If our risk is 3, we get to figure out what our target is. It's up to us. Can we base the target on the stock price? Absolutely. Can we base target on the option price? Absolutely. If it fills this gap right here, there's the gap right here, it would be about 11.55. So we can take this target, put it at 11.55. So we have a $3 risk or a potential $5 gain, almost a 1-to-2 risk reward ratio. Then I can click confirm and send, and boom skis, trade is placed. Bing, bang, boom. We are done. That's what's fun. The cool part about the stop is I think if this triggered in probably in 3 or 4 days, maybe a week, I could move it to here, right? I could drag my stop and change it. Alan says $3 difference mean you're risking $300 per contract. Correct. Yep. So with 15 contracts, what is my risk? 4,500. Exactly. So if I lose on this trade, I would lose 4,500 bucks. Great question. What else do I have, team? Alan says that sucks. I don't know. Depends on your definition of sucks, man. I wish I only lost 4,500 bucks learning this stuff. That would have been great because I could make 9,000, right? Hector says, thoughts on the odd strikes? That is a good question. So if we go back to the option chain, generally, and again, it depends on the expiration that you are selecting, Hector. This one specifically is September. So we have mid-September. Usually when you go to a monthly expiration, you don't have those half strikes. So for example, 167.50. Sometimes you will, sometimes you won't. However, I dislike half strikes. Example, if we come in here to September week 2nd, you'll see some half strikes. So check this out. You guys see how it says 167.50, 162.50, 157.50. They can be really, really good to sell, right? If I'm doing a covered call or something, but the volume, the open interest is usually kind of pansy. The spread's a little bit weak oftentimes. If I have to go with a half strike, I will, but I do tend to avoid them. Yes. I oftentimes go with a nice, easy, simple round number, 165, 170, 160, 155. But if I'm doing a covered call or an option sale, like a put sale or bull put spread, I have no worries. Yep. Solid question. Beautiful. Awesome, Cindy. Thanks for letting me know. This has been very educational. I always love pouring into individuals. I learn something new all the time. This is great. Hector says, such great info, even though I took the class last year. Yes, I will post this for everyone and their mom on our YouTube channel, not too long, but for everyone who is part of RLT, I will send you the unedited version in just a few minutes. Don't you worry. I'm here for you, boys and girls. But thanks for being a part of it. Yeah, you're all so cool.